Hey, welcome back. I am making this video as sort of another update. I think the last one that I did was in November, for an update for October. And then I mentioned I got a funded account for 25,000 funded account. So I think that's where my last update was. It's been a while. It's been a grind. So I thought I've been getting requests for another update, so I thought I'd provide one. Let's see what screen is up. Okay, so the screen that's up now, you can see. Okay, so the screen that's up now, you can see I have gone from 1 to 4 funded accounts, PA, performance accounts, not evaluations. All 4 are passed, and all 4 are in profit. I'm blurring out some of this stuff. You guys don't need to see that, but that's not really the point. The point is to show that I got 4 now funded accounts, and I will likely try for more. Not sure how I want to do that yet, because I also want to open either an LLC or an S Corp to run kind of the trading business, quote unquote, through that. And those accounts would have to be opened under that name, not my personal name. So we'll see what I plan to do in the future, but I currently have 4. So I'm funded at 100,000, and I acquired all of that funding through Cameron's 30-second style strategy that ICT talked about. I didn't use the 30-second chart. I used the 1 minute. And I kind of went over that in some previous videos. So I got all my funding basically off of that. On the 4th evaluation, I started to realize how much waiting for... Let me go over to my charts here. Like that. There we go. There we go. How much waiting for price to come down or up, come into a fair value gap, and then reverse. How much that really kind of messed with my psychology. And while any trade, as soon as you hit the trade button, your psychology is going to be kind of messing with you of, is it going to go my way or is it going to go against me? So really any trade entry kind of strategy that you have is going to manifest that sort of psychology issue, that stress, that fear, until you kind of learn to manage it. But what I ended up finding myself wanting to do, I wonder if I can find an example. Not really today, because it was PPI, and this week has been kind of horse crap. But let's just I'll kind of explain a general idea off of this. So imagine this is Cam's 30-second model, and let me do this, fair value gap. And this is a 5 minute, so you've got the raid leg here, you've got a 5 minute down close candle, and then you've got a retracement into the first 1 minute fair value gap, and you enter here at the touch of that fair value gap normally. What I found myself doing was it would enter the fair value gap, but I'd be like, I wouldn't really know if this one is going to hold up. Is it going to go up to this one? Is it going to go up to this one? I don't know. And so entering on a bullish candle when I'm looking to go bearish messed with me a lot, and I hesitated a lot, and I could have got this funding way sooner. I could have had way more, trades in general, profits and whatever. So I just realized it was an issue for me. So I'm like, okay, what confirmations can I have to know this is going to hold up? And so I'd wait until price leaves the fair value gap and then enter as a candle closes out of the fair value gap, and then I'd catch a ride down, ideally to like a next swing point or a next PD array or something. Excuse me. I've been pretty sick the last week or two. I don't know what it is, but my nose is currently the Hoover Dam, and it's solid. You could probably hear it. Solid blocked. But anyways, so I would do that, but I found price often likes to retrace to the fair value gap and then bounce again, or your stop loss is going to end up being huge in some cases. And it's like, well, where do you put an adequate stop? So I kind of struggled with that on entering at the close of the candle in the direction I'm wanting to go. What I found over time was that the highest probability situations that actually panned out, like this came down, closed, and then kept going as opposed to coming back. It came back a little bit, but why did it stop here and keep going down? Because of an inverted fair value gap on the other side. So what I started doing was entering when a candle, when we raid something and a candle moves away and closes over an inverted fair value gap. Sometimes it comes back and you can do your typical limit entry here and hope that it taps and turns away, but sometimes it doesn't. And regardless, your entry is like right here anyways. So I just entered. Sometimes it comes back to my entry and keeps going. Great. That would have just been the same as if I did a limit entry. Whoop-de-doo. And sometimes it just keeps going and you catch, a huge move or even just a scalp or whatever. You're already in it, whether it comes back or not, kind of is the point. And then your stop goes above the inverted fair value gap. Sometimes it wicks through, but the bodies respect it. So you can look for a body close above the fair value gap. So your stop isn't always the same. I haven't done that yet. I've just done a 12-point stop and 12-point TP. And I just run it 1-to-1 all the time. When it's real sketchy, sometimes I'll close early and take 8, 9, 10 points. Like yesterday and today, pretty sketchy, CPI, PPI. This whole first 2 weeks of this month have been crap. Really can't wait for February to roll around, but profits can still be made. So I it still works. It's just usually not as clean. So I've been kind of trading this inverted fair value gap strategy thing. What I do wait for, this isn't the actual setup that I look for. What I look for is a reaction off of a higher time frame PD array, ideally taking highs or lows in the process, and then a close over the inverted fair value gap. So this morning's entry was here. 12 points. Come down about halfway, retraces right to the inverted fair value gap again. Body respects it very nicely and takes off, and you catch that melt this morning. So that's more of the setup. I was just showing you down here because that's where we were at. But nonetheless, the concept still applies. If you react off of a fair value gap, close over an inverted fair value gap that was made in the process, typically you end up going to the next swing point. And then, it's nice on more choppy days like this. If you just get a straight run all the way for the whole day, you're never going to get an entry. But so that's kind of what I've been trading. And let's see, I can pull up this spreadsheet and that window. Sorry for the inception. All right, so you should see this now. This is my inverted fair value gap back test. I didn't count how many trades. I guess we could do that now. I've done a lot of trades, a lot of back testing. 98 trades. So call it 100 trades, basically. And I've gotten 86.6%. It was quite a bit higher. There were some really good runs like this. The whole month of November, I never lost. Okay. Excuse me. A week in December, never lost. But I mean, that's never going to happen. You get losses here and there. And it's just the way it is. You should never be afraid of those. But it's a really good strategy. So I tested a whole bunch of different things. The overall win rate, whether it returns to break even after 12 points, which is TP1. So normally, ideally you would take some kind of position off, maybe half at 12 points. Move your stop to break even and let the rest either run and catch a nice run or come back to break even and you've made 12 points on half your position. That's, profit is profit, right? So how many times what percentage of the time did it return to break even after I took half my profits off? About half the time it came back, half the time it ran. To me, that's good enough odds to do that every time. And 50% of the time, I'm going to catch a run further, or it never comes back to TP1 or to break even at all, I tested if it hit 12 points, came back to break even, and then continued. So like a retrace to the inverted fair value gap, and then continued past that and hit my draw. Only 13% of the time did it do that. So I feel safe moving my stop to break even, because if it does, typically I won't, only 13% of the time will I have missed out on a run to draw. So if it comes back to break even, it's pretty much going to stay there or go the other way. How many times did it go straight to draw? Just straight shot all the way to where I thought it was going to go. 44% of the time it did that. I started testing before 9:30 and after 9:30 and decided after 9:30 is the only way to go. So these don't really matter anymore. Only one fair value gap in the raid leg. So as price is going up, we'll call it going up. Let me switch back. Going up into your PD array, how many fair value gaps did it make along the way? Technically, this made two, one way down here and one way up here, but you're going to get 12 points out of it before it reaches this one to potentially cause a bounce or a resistance and stop price from going any further. So technically, this is only one fair value gap in the raid leg. That's nice. Sometimes you get multiple in a row, like this one. You got a little one here, a big one here. So like it could come down, close in between the two, and you enter, and then it hits this little guy and goes back on you. So you never know which one it's going to react to, right? So I always like to look for just one so that there's nothing else in the way. I can enter and it goes where it needs to go. Switch back. Clearly I don't have a good setup here. Retraces to the IFVG but doesn't hit break even 56% of the time. And then I track my wins and losses on each weekday. Monday and Wednesday seem to be the best. But anyways, 100 different trades. Some of these runs that it catches, like this. Did I catch this one? Return to break even, stop loss. It returned to break even, but then it ran to draw. 100 points it ran. 121 points it ran. Things like that. So there are a lot of, so and I also tracked if I took just 12 points, no half position, no move to break even, no leave it to run for draw, no nothing, just 12 points, 1-to-1, done and done. 17K in these 100 trades. That's not quite sequential. I did like October through most of December, and then I went back to the beginning of that year and did January through most of April. So a good number of months, but it's not really like in 6 consecutive months I made 17K. But just cumulatively through the whole spreadsheet of these trades, 17K times the 4 accounts, 68K. that could be in 2 years' time, and I'd be literally jumping up and down. For some people, that's a lot of money. For me, that would make a huge difference. And this was made in less than a year with this strategy. This one is if points acquired if all trades were taken with partials at 12 points and then close at the draw. Obviously, you can see when you let those runners go and you're able to catch them, it certainly increases your profits either way. So that's on one account. That's on all 4 accounts multiplied. 852 points total acquired using this strategy during this back test. So I've loved that. It helps with my psychology entering like in the direction price is going. That's what I've been doing lately, and that's what's brought me into the profit that I'm in now, and that's the strategy kind of I'll continue to use. I have found others on YouTube and Twitter and things like that. They also trade the strategy. So I thought that was kind of nifty. It's not like it's groundbreaking. ICT teaches inverted fair value gaps all the time, but he teaches on the tap, like the retracement and tap of it, which is fine. He has made comments of, like never short on a down candle, never long on an up candle. You don't enter a trade in the direction it's going. He calls that chasing price. So all of his strategies are a limit order kind of thing, tap and reverse on a PD array. That's fine. I have felt much better doing it this way, and it has been profitable for me. So it is it's not mechanical. And that is one point for those of you that have stuck with this video. I was going to make this point at the beginning of the video. How do I want to say it? Let's see. The only way to be profitable is to trade intuitively. I'm convinced, anyways, in my experience, in the number of strategies I've tested. I mean, there's 3 different tabs at the bottom of my spreadsheet for different strategies I've tested. Just recently, the Nexus Blast, the Cam style 30-second thing, and the inverted fair value. So I test a lot of stuff. Nothing, 100% mechanical strategies don't really work in my experience. You end up being maybe 50 to 60%. And that's not bad. It's certainly not bad if it's more than 1-to-1 R. Or 1 R, 1-to-1, whatever. But typically it's less than that. Typically it's no better than the flip of a coin. You could go in and just click the button randomly and end up being just as successful or not as successful as trying to follow a mechanical strategy and actually paying attention and such. So to me, because it was no better than literally just coming into charts and if I just hit buy right now, what are my chances? You know what I mean? So you have to trade based on intuition, not emotion, but you have to read the market and you have to kind of feel where it's going. So you have to learn how to read liquidity, and you have to learn how to find the draw where the target, that price could go next in either scenario. So is it going to go down here to this PD array, this 1 hour fair value gap, and then bounce up to these highs? Or is it going to take these highs and then come back down to that fair value gap? You know what I mean? So have an idea for kind of both and watch with what happens. Was it this morning that came down first? No. So this morning that was the 8:30 news. Yeah, right here. It kind of Judas down. A little Judas swing down, popped up to this fair value gap, and then found my entry, and it came all the way down to there. So it's not finding daily bias and none of that bullshit. Like, I don't care which way price is going to go on any given day. I don't care. All I look for is where are the high time frame points of interest, and if it hits it, where could it go? Where are the liquidity pools, we'll call it, significant highs and lows? So I've got an relative equal high line drawn out there with another high, all within this 1 hour fair value gap. I'm surprised it didn't get it. I was waiting for it, but that doesn't mean it won't later today or next week. These highs will be taken at some point, I'm sure. There's a lot of liquidity there. So lower on the 1 hour chart. I mean, just any 1 hour significant. It's that simple. 1 hour significant highs and lows. Those are already taken. So there's that one, this PD array, that low, this giant fair value gap, that low. There's all liquidity there. So find a way for price to react off of something and go there. And then just let price play out. Let it show you what it's going to do. It's coming up here and it's not having enough juice. Look at all these wicks. Wick. I love wicks. It doesn't have the juice to get up there. So it's not doing it. It's not going. It needs to go get liquidity for the power and the fuel to get up there if it wants to go up there. So let's take a trade on the way down to get some liquidity, right? You move from a fair value gap to a liquidity point and then back again, and then finds another fair value gap, moves to a liquidity point. Take those stops. Knock those people out of the market. That's the whole kind of game. So there is some intuition involved, and there should be in any strategy that you're trading. I don't think 100% mechanical is the way to go. You check. I thought at first, that was the way to go. Why? Because then it's not my fault that I thought wrong. I followed the mechanical strategy. It's okay. It's all good. Not my problem. And I don't have to learn why or learn what factor I had in it. It wasn't me. It's 100% mechanical strategy. I just followed the bullet points. I didn't do nothing wrong. But that's not true. You read it wrong. I mean, that's what it is. You read it wrong. So find out why you read it wrong. Find out what the right read on it was, and keep learning and practicing from it. How many hours, days have I spent? I just sit there like the best analogy that I like to use is practicing free throws on the basketball court. Just practicing all by yourself, empty court, and you're just practicing free throws. If you don't do that, how can you make a free throw after a foul in a tournament basketball game in front of people? You know what I mean? So like cool, calm, and collected maybe during practice, and then your heart's pounding in your head during a tournament while you're trying to make this free throw and you choke on something you would have easily made during practice. But that's the nature of it. Things get intense in the real application where you instead of practicing where it's nice and easy. But the more you practice, the better you get. Eventually you're sinking those free throws in tournaments with your eyes closed, So backtesting is definitely invaluable, and I kind of lost my train of thought with that, but nonetheless, you have to learn those things, in my opinion. Don't look for mechanical strategies, because I don't think that's the way to go. But everybody has their own mindset, their own brain about it. So if it works for you, that's great. And I mean, EMA traders are profitable. That's great. Do I think it's dumb and I don't think it really works? Yeah. I think ICT's way of reading the market is the best way. And we're all entitled to our own opinions. So that's my advice, though, is learn to read the market, learn to trade intuitively, Don't just trade off of checkbox. Have some check boxes, like price has to close over the inverted fair value gap before I take an entry. Price has to hit a PD array from the 1 hour time frame before I even consider a reversal. So like there are conditions, yes, but like you have to be able to know kind of where the liquidity lies, where the targets are, and that sort of thing. So anyways, questions, comments are more than welcome. I've been debating on starting some kind of mentorship thingy where you can be in my Discord, maybe watch me trade live. Maybe I'll like provide analysis on like here's what I think is going to happen. Here's what I like about this trade. Here's an execution I took. Stuff like that. I'm not really sure yet. As you can probably tell, I'm not quite sure how or what I want to do. I don't want to sit and make, educational videos, because ICT already did that. So if you're looking for a mentorship, go do that. 2022 mentorship model is the start of everything, in my opinion. He's got a whole playlist about that. Go watch it. If you haven't, this video is pointless to you. It's not going to do anything for you. So I'm not really sure how I want to do it, but that's a potential this year sometime. Anyways, I think that has answered all the questions I've been asked so far. I don't think I'm really leaving anything else out. So I'm going to continue on with my funded journey. My plan is to acquire profits off of these funded accounts to fund a personal account so that I don't have to rely on a prop firm. But that's further down the line, I think. I'll use prop firm money as long as I can and then transition into my own. So until then, I'll just keep riding this out. But if there's any other questions or feedbacks or things you might want to see another video of, let me know in the comments below. I'd be happy to do it. But thanks for checking this out. I didn't intend it to be even 10 minutes long, but I like to talk. So here we are. Thanks for sticking around, and have a good January. Talk to you soon.